Hey guys, in today's video, I'm going to backtest a simple mechanical fair value gap strategy to see just how profitable it can be. Now, when I was performing the backtest in real time, the first couple of trades gave me serious doubts, but by the end, I was really surprised with the overall results. Pay special attention to the mechanical rules I outlined at the beginning of the exercise to see if those are rules you can use in your trading. Let's jump into the chart. Okay, guys, we are here on Monday, January 5th, 2026 at 7 a.m. So for this strategy, I'll go through a couple of rules and then we'll get into the backtest, since mechanical rules are key in order to find a strategy that fits your lifestyle and also is easy to follow and repeatable. We're going to start the trading day at 7 a.m. and continue until about 4 o'clock. We are trading Euro USD, so that means we can hold trades overnight. And I think that'll come in relevant as we go through the backtest. Now, you'll see that I've already marked up a fair value gap here on the 15-minute, which is what we're going to sit on. We're going to just work off the 15-minute. We're going to wait for price to mitigate the fair value gap, not close through it. It can wick through and close inside or below in this case, but it cannot close above. But once that candle closes either inside or under this bearish fair value gap, we can take an entry on the closing price and place our stop loss at the edge of the fair value gap or the candle, depending on where we are. And our profit target will be dependent on what liquidity we see on the other side of the market, depending on if we're going long or short. Those are the rules. I'll bring them up as we go through the session, but let's just jump in. Okay, we're going to play price out, see where it takes us. Now, as new fair value gaps get created, we can mark them. The other thing is that we're going to be doing this independent of order flow. So we're not going to track order flow. The last rule before we jump into the backtest is that there's certain fair value gaps that we're going to track. The reason I'm tracking this fair value gap is because it breaks these session lows here aggressively. And that means it's a viable fair value gap for my strategy. There are a bunch of fair value gaps right above it that I haven't marked up because they don't take any key lows in this case. Same goes for bullish fair value gaps. They would have to take a high, but any fair value gaps that render as we play price action will have to pass that test. They have to take our low in order to be a viable area of consideration for us. Okay, but that said, let's play price forward and see what we get. Now, this is a good example of a fair value gap that we would want to mark because it takes this low right here. And that is a great setup. Okay, we're going to keep playing price out. We want to see price retrace just like that. It is 8:45. And now the question is, does it close inside or outside? So this candle closes inside. So that is a viable entry for us, meaning that we expect it to short here. Now the candle closed here. Our stop would be at the top of the fair value gap. And then we would target the bottom end of this liquidity here. So this is a crazy 6R setup of a $10,000 account and play that out. And we get stopped out immediately as price goes to stop loss here. Okay, we're going to play price out. So now this fair value gap right here does appear, but it doesn't take anything of significance. Whereas this fair value gap right here does. It takes this high right there. So I'm going to count that as a viable fair value gap for myself. I'll mark it up and turn green. Okay, we have it. There we touch it. So there's another entry here. We end up having a close inside the fair value gap. Pretty nice rejection weight. So what I'm going to say, I'll place my stop there and I'll target the other fair value gap that we just marked up. Place the trade on, tagged in, but then get stopped out. So that's 2 trades for me and 2 loss. I go to the next day. Let's go away. We're at 7 a.m. here. I will mark this fair value gap here because it takes these lows here. Needs to play price out. Okay, just rewind back. We get to tap into this bullish fair value gap that we had prioritized the other day in our backtesting exercise. So that counts as a trade setup. We're going to go coast to coast here between these setups. Price is middling around our entry here. Now we are going to overnight hours because we are trading Forex. Can trade overnight typically if we're trading on capital. And we get stopped out during Monday session. So far, not so great. We'll see. We have to go to our beginning of our year session to right here. Pretty consolidating day here. I will take this fair value gap because it takes these lows. And I actually just missed an entry here. So if you see, this fair value gap was created and it's valid to me because it helps displace those lows. So if we consider those, we get to tap in. I place my stop at the top of the candle in this case, just because it did wick through. Now that doesn't invalidate the fair value gap or the entry, but it is something we need to consider for our stop loss placement. Okay, so we place another $100 on this and we get wicked out. This doesn't go overnight. We're not playing in here. Okay, we have another fair value gap right here. It's valid to me because it takes this low right here. So we'll see how that plays. We get a tap in and a close underneath. So we'll take the entry and a close of that candle. And since there's no immediate price action, oh, well, there's this low from the other day. So this is the previous day low here from a while back. And we get topped out. So far, not great. Now, it did go for the 5R, but it stopped us out beforehand. So it could be a situation where retail trading stops were hunted potentially. In any case, we're going to go to the next day. So we could find we have a big news event, manipulation, another news event, looks like. Okay. So this fair value gap, I would not count because it didn't take anything. It got to close it inside of the previous bearish candle with left. So I'm not going to mark that up. And keep going. It's like nothing's going to happen this day. So we're just going to skip to the next. And we actually blown through a couple of old fair value gaps. So that means they come off the table. Yeah, at 7 o'clock already starts. Okay, this fair value gap right here is associated with this aggressive bullish candle, which takes these highs here. So I'm going to count it as an option. We get a tap in and a close outside. So we're going to put the long on. And we're going to target this old bearish fair value gap that we had from the very beginning. Okay, yeah, and we get stopped out again. I'll be honest, I thought this would be a little bit better for us. The fact that we're just getting blown out of fair value gaps is interesting. Well, this fair value gap to me didn't take it a significant low, so I'm not going to prioritize that. All right, so this fair value gap right here does take a low. Now, it's not the greatest low, but you see that right there. It's technically a low, meaning there's no price action immediately to the left or right that's lower in this case. So it is a low that gets taken. They're wait for it to get breached right there. So on this candle, you would enter on the closing price and target the top of the fair value again. Let's see where our next opportunity is. Let's target this session low here, a couple of session lows right down here to attract some attention. Get tagged in and price starts moving in our favor. We're into overnight hours at this point. We're into the next day now. Now, I'm not going to stack orders or anything like that for the purposes of this test. Yeah, this trade is going to take us into a third day, but we're heading in the right direction, so that's something. Again, I'm not stacking any trade on top of anything at this point. I'm just going to jump to the 30-minute to speed this up a little bit. And we finally had to take profit on this one. It took us 3 days, almost 4, to do it, but it got us done, and it actually brought us back into profit. So that could be something with the strategy. Let's just keep playing it out here. Okay, we have a fair value gap that has a bearish fair value gap that has taken these lows here. So let's see if we get a mitigation of that. This fair value gap is not taking significant to the left, so I'm not going to prioritize that. It actually gets broken through, which is what you want to see. We're at the end of the day here, so we're just going to fence forward, and we're back near that fair value gap. So that's a good sign for us. We're just waiting for it to get touched. Now it does, right there. It barely gets touched. Now my alarm would have gone off because it would have been at the bottom edge of the fair value gap. Place our stops at the top of the fair value gap, and we're going to target, this would be previous day's low. So I'm going to target that, get an aggressive move down, looks like 10-15 maybe, something happened, and we get take profit. So that worked out for us. We have another fair value gap that's actually created as part of the move right there, because it takes this low here and also takes these session lows there. So a lot of confluence there on that one. I expect this one to be a strong one. So remember to remove the old fair value gaps that have been mitigated, since we do not want to take any mitigated fair value gaps the second time. Okay, we got another tap in now. Where does it close? It closes inside, which is fine with our rules. What we'll do is place another trade. Stop loss at the top of the fair value gap now. Trick will be to find a logical take profit. Doesn't look like there's any immediate price action to the left. So what we're going to do in this case is we're just going to set a simple 3R trade. Since that's something I typically do. We get tagged in quickly. Middling ground. We get a big gap down now. Friday to Sunday, we get a big gap down, but back to our efforts. So we go back to entry and stop loss. All right, so we're going to go over to the next day. Take that off the charts. So let's see what fair value gaps we get. Okay, let's rewind back. I think that's something. Now, here's a fair value gap. This one's tricky. This is the candle that creates that fair value gap, but it itself does not take any highs. So I'm not going to include it in this case. It doesn't fit our rules. You notice that actually we would have gotten stopped down. You see there's a little wick there. If I zoom in, you see the wick right there. That would have stopped us out. And so we didn't take it because it didn't follow our rules. Okay, these fair value gaps are not doing what we need them to do. So we're going to take them. Bearish fair value gap does not do it. And we're pretty much at the end of our day. So I'm just going to fast forward to the next day. All right, a lot of bullish price action. We even go through an old fair value gap. So now let's see, there's some fair value gaps here we can play with. This one here does take the highs to its left, so that counts. I'll take this one here as well for the same reason. So let's see if we can get a retracement down into that area, part of our New York session. Looks like we're not going to get it on this day. We'll fast forward to the next. Okay. This candle does not do it. I didn't take anything significant, so I'll not take that. And price seems to be gravitating back to these fair value gaps that we marked up that were not triggered by alarm, nor that at the end of the day. So we're going to have to go to the next day. It does tap in and eventually give us a reaction, but we're not awake to see it. So we're going to have to take that one off so to mitigate it. As long this fair value gap is already above these highs. So it's technically not the candle. If this fair value gap had left it, then maybe you have an argument here, but I just can't take that one. Now this one is different. This fair value gap here does take the high to its left. So I'm going to count that. Yeah, we get tagged in, we get a mitigation of that fair value gap, but take profit. We're trying to get this session high here. Get tagged in. And we get take profit. I'm going to take profit win there. And we're going to go to the next day. Since we did the C mitigation of this, we're going to take this off. I don't see any viable fair value gaps for overnight here, so we're going to have to play this out. Again, these fair value gaps that are forming are not taking any highs in this case, so I'm not going to count them. We're approaching the end of our day here, so we're just going to fast forward to the next day. This is really moving up on ours here. This is a mitigated space, so we're not going to touch those. So technically, this fair value gap here does take these lows right to its left, right? That's the candle. It takes these lows to its left. And that's the candle that broke it. The one above it does give a fair value gap, but it doesn't quite close the low. It closes just at those lows. So I'm not going to count that now. I know how this is going to go, but these are the rules. Because it's such a tight stop loss, and honestly, I would never take such a tight stop loss in any case. That's like 11 pip stop loss. So I'm just going to go to the top of this other fair value gap. This is, a lot of gurus talk about discretion. For me, this is a discretionary trade in terms of my stop loss placement. I'm going to target this fair value gap here, which I didn't mark up, but is a valid fair value gap for me because it takes these highs to its left. So I expect that to be the next logical area for price to go. So I'm going to set the trade on. We get tagged in and stop down. Okay, so that did not go for us. We're approaching the end of the month, which is where I'll pause the exercise, see where we are, but let's just finish out the month. Is this a viable fair value gap for us? It is. And the reason this is a viable fair value gap for us is because it takes this high right here. Okay, so let's see if we can get tagged in. No, price does not tag in during our New York session, so we're just going to have to fast forward. It blows right through it in London, so that's good for us. We don't get caught up in that. This is a viable fair value gap, even though it's super small. We'll see what becomes of it. We can use a discretionary stop loss here. But play price out could be a draw on liquidity later. I'll stack these fair value gaps together since they're sequential and it takes this session high. I really like that. We're going to tap back in there. I'd love to take that trade. It doesn't look like we're going to get it though, but it could be a draw on liquidity later. We do have a setup here in this. Okay. So here's a fair value gap that takes the high right next to it. This one. By our definition, that has no price action to its left or right. That is higher than itself. So it becomes a high, which gets taken with a fair value gap. So if you're going to tap back in just like that and a candle close inside, it's viable for us. So what we're going to do is we're going to do it on the candle close. And because there's a couple of little fair value gaps, I'm just going to do it till the bottom of them. So the discretionary stop loss, since this type of stop loss would be much too short. So I'm going to give it a little bit of space. I'm going to set up a 3R setup. Since do we have anything significant to the left of us? Let's check. Do we have anything to the left of us? We don't. Okay, so this is going to be the setup. We're going to risk 1%. And we get immediate reaction up. This is on the 1 hour. Let's go to the 15 minute. And we're going to take off. Let's go to the next one. We're going to take this off. Okay, so any overnight fair value gaps? Not really. So we have to keep playing price out. There's one right here. This bearish fair value gap is significant because it takes this low right here. Okay, but the candle, the 50-minute candle closes above it. So that completely invalidates it. We're going to take it off the board since we don't want it to confuse ourselves. So that's why we have that one rule in our tool bag here. Let's see. Okay, we get a touch in to these fair value gaps. Remember, they took that session low. I expect this one to be a very strong fair value gap. So before a long, since it's a bullish fair value gap, place our stops just under the fair value gap zone. And I'm going to target New York high here. Okay. So we get tagged in, reaction coming out of it, and then it hits. So it hits nicely for another almost a 4-hour trade here. And we're not even done with the month. We got 2 more days here. I'm going to take this one off the board. And even overnight fair value gaps. We have one that took this low as well as, well, no, it didn't, but it took that low. Okay, we can see if price taps us in. Okay. It taps us in here. Now, this is going to be the question, like, where would we put our stop loss? Because it's too short of a line. This is a mitigated stop. This is a mitigated. I think I'm just going to place it at the top of the mitigated fair value gap. The only other logic I could apply to it is that it's also at the last buy to sell candle. So that's enough logic for me to say, okay, that makes sense. I will target previous day low all the way down there. Let's see what happens. I'm going to get stopped down, I think. Yeah, it just gets, oh, that one hurts because we just got stopped out on that one. Okay, on to the next day. Okay. This is a unmitigated fair value gap. This is also our last day of the month. It takes this low, which is why I'm targeting it. Now, this candle mitigates at 645, which is outside of my window, but those are the rules. Now, if a candle closes above that, just like this, inside of my window, then I will take it. So what we see here is that the candle, the 7 a.m. candle, penetrates deeper into the fair value gap and still follows my rule of closing inside of it. So what I'm going to do is place my entry at the top of that candle. And I'm going to target my take profit these equal lows here from the past Asia and London sessions. Okay, so I'm going to put that on. We get tagged in. The price immediately starts pulling away in our favor. Can it hit take profit for the last day of the month? It does. Yeah, I'll tell you what, we got $1,600 in P&L here. So we're going to begin the next day, which is February. So this is where we'll pause our exercise and we'll toggle to the results. All right, guys, here we are on the results page for the exercise we just did, the fair value gap strategy we just employed on Euro USD for January of 2026. And as you can see, a 16% net P&L across 15 trades, 40% win rate, which is really good. We had a varying sample of risk to reward setups, but overall very profitable for 1 month. Now, 15 trades is nothing to go into the live markets with, but it's directional for sure. Definitely to the point where I'll want to test this out for February again. Certainly profitable. We got a great profit factor of 2.8. I'm going to try very hard to not dig into too many of the data points here since it's such a small sample set, but again, very directional. We had a very tough time at the beginning of the month, as we can see with the line chart here. But after that, we didn't quite look back in terms of success. If you found it helpful to see all 15 trades play out with my explanation, then hit subscribe so that you can see more of these type of videos in your feed. Check out my library because I have tons of videos just like this where I backtest strategies and go over trade examples for my live trades as well as my backtest exercises. I'm encouraged to backtest February. If you'd like to see that, then drop a comment down below. If you'd like to see another video where I do a trade breakdown, then check out this video right here. Every trade teaches me something different, and this next video may just do the same for you. See you later.